You're watching the Blockchain Interviews, hosted by Dan Weiskopf. Each episode features interviews with leading industry experts so that viewers can have a deeper understanding of today's quickly evolving blockchain marketplace.
We are here with Trent Stout doing the blockchain interview series today. Thanks, Trent, for joining us today. I really appreciate your time.
Thank you for having me. It's been great to meet you and start this dialogue.
Listen, you're very focused on the energy space as a consultant, but you've got an interesting Wall Street background. Tell us a little bit about how you ended up in this industry after working on Wall Street.
Yeah, it's funny. The first couple Bitcoin events I went to, they could spot the former Wall Street guy because I was the only one wearing a blazer and a button-up shirt. So I've had to really change my attire as I go to these conferences. Otherwise, they just don't trust me. So you're most likely to see me, looking like Steve Jobs in a black T-shirt and jeans now, and that seems to, put people a little more at ease. So I started my career investment banking, at the firm Bear Stearns, which was a great start, and then went to business school at the University of Chicago. Thought I was going to go into private equity, but I realized at the time that I was still too poor to go into private equity, that I needed, I could not pay myself for 8 years. So I went back to investment banking and, found a nice spot in Texas at Morgan Stanley in the energy group. So that was my first real foray into oil and gas. And so started working in banking in that side and got put on some deals with the commodities trading group, and really enjoyed understanding the commodity cycle and pulling commodity out of the ground, and how capital and commodity prices, interacted, and the forward hedging, and just the real unique structure of the deal. So at that time, Merrill Lynch bought EKT Trading, which is basically natural gas and power trader. And so I took a big risk. I left pretty sure career at Morgan Stanley and went and helped Merrill Lynch grow this business into the global commodities business. So there, it was very similar to early days here in cryptocurrencies and DeFi. It was kind of the beginning of the commodity super cycle, and everybody wanted to know, how do I get access to commodity price exposure? And so large asset managers and wealth funds wanted to know, how do I basically trade commodities or get exposure to them without actually knowing how to trade them? And so that's where a global investment bank and big balance sheet and a lot of smart people we put together in a team, spent a lot of time coming up with ways to access commodities as an asset class, and that led to some pretty interesting quantitative strategies in trading. And a lot of the similarities that we see here in the cryptocurrency is how institutional investors are trying to get access to exposure to these. And so that time there at Merrill Lynch, became Bank of America Merrill Lynch, and I ran a big piece of the global trading business based between Houston and London, living pretty much on a plane in Asia 4 weeks a year. So really got to see from a global perspective how commodities impacted every facet of the economy. So the price of oil and what that translates into is percentage of GDP spent, really affects pretty much everything that everybody does. So it was a fun learning time. And now where I am, we can talk about that in a minute, but I was able to kind of bring that commodities world together with my personal passion for cryptocurrencies.
Yeah, let's jump right into it. Priority Power is where you are now. Who is Priority Power, and what do you do at the firm? Because it's definitely a unique company.
Absolutely. And Priority Power is basically a full services energy consulting services. It's really kind of hard to describe. Our marketing guy, want me to tell you some buzzwords about technology-driven platform and our expertise. But really, it's a company that's been built over the last 20 years, and now it's a name that's pretty well known in the miner space, but before that, it was really focused on helping the oil and gas industry basically decarbonize and electrify the oil fields and production. So Priority Power basically is, a consultant, an advocate of the client. We always act on their behalf and help them from interconnecting with utilities and understanding the actual physical and transmission and capacity constraints where somebody wants to take power. We help them work through that process. Then just out of necessity, when utility companies couldn't keep up with the oil and gas need for infrastructure, a lot of our founders had worked with the utilities and built utility grade infrastructure. So we also manage EPC projects for customers and build substations to help them take power and step it down to useful levels. And then our real kind of focus and bread and butter is long-term energy management. So we help the clients purchase energy, obviously trying to get the lowest cost. And then we also help them turn any flexibility they have in using that energy into money to help them net down their power costs. We call that demand response. So as far as, we can tell, we're the only ones that have a large focus in ERCOT that do the full services, right? There's other companies that do everything, but we've found that the customers, the real value comes from being able to put it all together and do it at a, one low, transparent price. And, that's led to, great success taking what was built in the oil and gas industry into now the crypto mining industry.
Yeah. Okay. So hypothetically, I'm going to build a 100 megawatt plant or farm. They call them farms, which I always think is kind of funny, but in Texas. Okay, I'm going to call you up and I'm going to say, I've got $50 million to build this facility, hypothetically, right? I might need more, but I'm starting with 50 million. What do you do for them, right? As far as planning out and helping them with their energy management costs?
Sure. So, I like to say the only long-term sustainable competitive advantage for mining is the lowest cost of power, right? You can compete on all these other things, but ultimately you also need the lowest cost of power to be able to win the long race. And so the idea there is, okay, where do we find the lowest cost? And so power, the location for power is not about, it's not like typical real estate, location, which, has these physical attributes around the land and proximity to things. It's about the location here is where is there capacity available on the grid that can be accessed the fastest and for the cheapest amount of money. So what we do is help clients source places of interconnect with the grid that has infrastructure that's already in place that has additional capacity within it. And so, we work with them to request officially that from the utilities, and then that sets the speed to market that you'll be able to take that stated amount of power, and then how much money you'll need to basically pay to the utility to upgrade anything needed to serve that load. Theoretically, at least in Texas, the utilities, they have an obligation to serve. And so theoretically, you can have as much power as you want anywhere, but it's all a function of time and money. So you can say, I want 100 megawatts here, and they can say, you can have it, but it's going to take 20 years and $1 billion. Clearly you don't want to take 100 megawatts there. Over here, you can say, well, you can take 100 megawatts and you can have it in 3 months, and you post $500,000. So where are you going to go? So it's really about finding the sweet spot of time, capital, and then of course layering on other locational items like in and out of city limits, counties, building restrictions, tax incentives, different things like that are more driven by the client specific preferences. So we'll show them places where they can secure that capacity as quickly as possible for the lowest cost.
And we get a lot of phone calls these days with concerns about where energy prices are. And granted, at the end of the day, the price of Bitcoin, I think we'll agree on, is more important than where the price is of energy, right? But nevertheless, we do get these questions like, the Bitcoin miners are going to be destroyed by energy prices where they are right now. But some of these companies have locked in lower prices. Some of them have not. How do you counsel some of the companies today with energy prices the way they are?
Sure. And, like you said, right now with the run up in Bitcoin prices over the last year and a half compared to the cost, it is an incredibly profitable business still. And so the cost of energy matters, but not as much in the near term. But that's not what we plan for. We want to plan for the long run, and we want to plan for the marginal economics when things get tighter. And so what clients are able to do, depending on their complete risk profile and whether they're a self miner or whether they're a hosting company, depending on what types of the tenor of agreements, clients can lock in power for 10 years or even further out if they want. And they can lock in power even before they built their facilities. We typically don't recommend that because there's so much execution risk until you're actually plugging in miners. But at some point, when you do have certainty that you're going to be taking power, you can lock those in. The markets are very liquid from a wholesale perspective. And so, these markets are traded over the counter, they're cleared on ice, they're transparent. They're, on a daily basis, you can see what the cost of power is, from tomorrow through buying it over 15 years. So it's very doable to lock in your cost. And then the added benefit is you're locking in your worst case cost. So for this volume of electricity, this is the most you're going to pay over the life of that. And then from there, with these loads, they're very flexible, right? So they can turn off. So now that they bought power, let's say for 10 years, every day they can say, well, is the price I paid for power, would I rather mine Bitcoin or would I rather not mine Bitcoin and sell my power? So they'll all have a break-even price for the economics of, is it better to sell my power at a high price where it spiked, or is it better to mine Bitcoin and then monetize that into revenue? And so, we really look at our miners into, we translate Bitcoin into dollars per megawatt hour and say, okay, if you're buying it at $40, you're implied right now selling it for $200, $400, $500. And that's the way we can talk efficiently with them about the power purchases.
Yeah, so it seems like a lot of miners are headed to Texas these days, institutionally sized miners. What has Texas done to attract so much mining interest?
Sure. Well, the first place to start is the concept of regulated versus deregulated markets. And so every state has decided whether they have deregulated markets or they're continue to be regulated. If they're regulated, you still have kind of the poles and wires or the infrastructure grid and the people who produce and sell the power integrated in part of a regulated environment. In the deregulated environments like Texas, the infrastructure and then the actual energy supply piece is separated. So the regulated utilities in Texas still have control and responsibility for maintaining the stability of the grid and the infrastructure. Then every user of power has basically a competitive choice. They can decide who they buy power from. And so that means who's responsible for putting the power that they're going to use into the grid, whether they generate it or whether they buy it from a generator on the wholesale market. So that competitive environment creates already incentives to have lower cost of generation because people are competing for clients to sell power to, and generators are, competing to sell power to other reps that would then sell on to the client. So you got a playing field that incentivizes competition. Starting point. The next factor is simply Texas has the most wind power generation in the US. We have the most hydrocarbon generation in the US because we have the most hydrocarbons under the ground in the form of natural gas that can be, essentially manufactured these days. They know where it is. So it's a calculated cost of capital and return to pull that out. And, within the next 2 years, we're predicted to be the largest producer of solar energy. So now in one place, you've got a competitive market, and then you have the best place for wind generation geographically, you have the best place for solar generation geographically, and you have the closest hydrocarbons to come out of the ground and generate all in one spot. So that recipe leads to a long-term sustainable advantage for having the lowest cost of power in the US.
Yeah. So along those same lines, it seems to me that the crypto mining industry, and I wish it wasn't called the mining industry. It's just a misnomer, kind of like smart beta is in the ETF industry. But I'm sorry that I'm digressing. We used to be, everybody used to joke. I only like dumb beta, right? Yeah. What does that mean? Anyway, sorry. It's like a random thought. It seems to me though that the crypto mining farms, whatever you want to call them, are helpful to utility companies. And I don't know that people understand how the mining operators, and you've touched on this, right? They can turn off if things are not economical or as part of the contract, right? And so it helps the load factor for the utility company. Walk us through that issue.
Sure. So the simple place to start there is, for all practical purposes, you can't store electricity at scale. So yes, you can store in batteries, but the battery storage that's in place is very, very minimal. So effectively, whatever's consumed has to be produced essentially at the same time. And so if you think about like a system of pipes that just have water going in and water coming out, you've got to keep those pipes at a constant pressure. You need to match the water going in and the water coming out. Electricity is no different. As you push electrons into the grid, you need to be pulling them out at the same rate to keep the frequency the same. So the frequency is basically the same like pressure in a pipe. It's a very small band that frequency needs to stay to have the grid stable and not trip breakers and do all things. So when you have unexpected events, like a generator trips offline for something, it could be any reason, an employee, could have kicked over the off switch or, something silly. But, generally it's gonna be very complicated, something they didn't expect, they need to shut down for safety reasons. Something like that will create a shock to the grid that all of a sudden you're not putting in enough electrons, they're coming out too fast. And so the way you can overcome that is you have another generator that's on standby, and they can spin up really fast and put more electrons in the grid. Well, if you don't have another generator, what you can also do is have someone who's taking power out of the grid stop taking power out of the grid, and that will essentially keep the pressure in the pipes, right? It'll keep that frequency balance. So people who have the ability to stop using power in their business models are very few and far between. If you can think about a factory and an assembly line or some other complicated process, if you just turn the power off, it's going to be a mess, right? It's going to stop everything. All the computers are going to need to reset and reboot, and you could lose a lot of money going through a startup cycle, or you can just break equipment, right? It's just not that possible. So mining facilities are one of the only loads that are currently available that aren't going to harm their equipment, and it's not going to harm their entire business model to ramp down for 4 or 5 minutes to help balance that frequency. And so as so that's simply how they do it. Basically is they stop taking power the same way a new generator or another generator would put more power in the system when an unexpected event happens, or we completely mispredict the demand usage. So everybody is home because it was a sick day and everybody's using the air conditionings more, right? We didn't predict it right. The more practical reason is, now that we have a very high percentage of renewables, wind and solar, is that simply the wind stops blowing as much, or some clouds roll through. So those are very unpredictable things. By definition, weather is chaos. So now we're introducing more chaos that we're trying to control in that pressure system.
Yeah. So in is it possible to think that utility companies and Bitcoin miners ever might merge? You can say no, by the way.
Yeah, no, I mean, the answer is, I mean, that, it's your classic, should you have more vertical integration, right?
That's the question.
And, it's an economy that's built on specialization, and, investment bankers make entire careers of vertically integrating and then tearing, breaking things apart, right? I mean, in my, few years of investment banking, the number of, you know, accretive acquisition, models, and then break apart, analysis, sum of parts, they're the same. So yes, of course, that's a natural thing to go is these guys make energy and these guys use energy, so they should buy each other. But I think that's a very simplistic view, right? There's a whole myriad of other advantages where there's excess energy generation or trapped energy that it can be used without the energy company needing to vertically integrate and get into an area that they really don't have any understanding of.
Yeah, I think about it, and I could imagine the regulation issues, right? If that were to try and happen, right? So let's talk a little bit about energy further. And there was an article recently written about the cost of creating a Bitcoin. Walk us through that in the context of the math or the thought process, because I think sometimes a lot of folks believe that really much too much kilowatt hours are required to generate and create a Bitcoin.
Sure. I think before I get into kind of the details, what I like to when we get on this topic, to me, it's about framing. I'm happy to talk about how much energy it costs to make a Bitcoin, but in my opinion, the only reason people even talk about that is it's because they've made a decision that they don't think there's a utility to Bitcoin, right? That they put zero value on the goods, so they have nothing to weigh the energy input against, right? And the reality is every single thing that we do or touch in our lives has energy baked in it, right? The amount of energy that goes into creating aluminum, like how many things do we own that have aluminum in them, right? People don't think about that. So, right. Framing the argument about how much energy takes to make a Bitcoin, to me, is kind of like, even talking about it is the wrong place to start, but I'll still go through that for you, because if you look at a high level, the total amount of energy usage, it's a rounding error. I mean, it's like tenths of percentages versus other energy intensive things, right? The mining council that was put together to respond to some of Elon Musk's statements, they put out some interesting charts. I think they're pretty publicly available, but it showed, okay, instead of having people writing articles that don't that have a clear agenda, comparing Bitcoin usage versus countries, they compared them against other things that we can wrap our heads around. One of them that was kind of interesting to me was like holiday lights, right? Like, people use holiday lights. Well, you can have your own opinion of, I like them, right? So I don't want to tell people not to do that.
Sure.
Gaming, right? Gaming uses more electricity. So it's a matter of like, well, if we're going to talk about Bitcoin, like, aren't there like 100 other things that we can argue over the utility of the usage, or, before we get to how much you use, right?
Yeah,
I'll play the game. I'll play the game.
Play the game. Yeah.
So it's complicated, but really simple. Each miner has basically has a power usage per number of hashes. So number of guesses that it can do per second and how much power it uses, right? So it's just a math game. Like, so how much power, and obviously the efficiency of that, watts per terahash or whatever it is, drives the cost of mining a Bitcoin with that machine. So, there's old machines that are less efficient. Essentially, they use more power per guess, and then that's, continue to progress. So if we just use some of the most recent, numbers, and you translate that number of watts into guesses, and then you look at the overall network, so the number of total guesses that people are estimating, and then what it takes for your portion of that to be awarded Bitcoins, and then how much energy did it take to run your machines to do that. So at the most efficient machines, we estimate it takes about, at current everything, about 165 megawatt hours of power to create a Bitcoin, right? And so now it's like, well, how much did you pay for your power? And so if we used a pretty conservative estimate, because they're, lower levels are definitely achievable, of $40, that's around $6,600 a Bitcoin for just the energy portion. So I'm not including the cost of the miners or the building or depreciation or anything. That's just how much electricity to purchase and get it delivered to my location did I spend on creating a Bitcoin. So $6,600 versus, the price of Bitcoin. And I think earlier it was trading, around 43,000. So that's kind of the simple math. And, what that means, that's, to me, that's what it means. It's a profitable business to be in. They mine Bitcoins for a lower cost than they can sell them currently.
Yeah, to me, the business is very compelling from a return on invested capital, which frankly, every business should be measured by, right? What's your payback period, right? And certain miners, it might be 7-8 months on the equipment, right? And then you factor in the energy, et cetera. But at the end of the day, if your break-even level is around 10,000, Bitcoin's at 40,000+, and as you use the guess word, right, that has to do with the difficulty, right, and solving that algorithm. That algorithm may be getting steeper and more difficult, but so long as the price action keeps up with that algorithm, you've got a very profitable business.
Absolutely. And as we've seen, again, these are all my estimates. If you're looking back, 70% of the cost of mining that Bitcoin was the energy only portion. And as miners have become more efficient, and if you're, buying miners, at wholesale, like a large scale miner would, then it's closer to 50-50. And, I see as we have new innovations in the actual miner business of new chips, new power configurations for those chips going forward, we're going to again see more efficiency. So the facilities that clients are building in the future are going to be able to get more output for the same amount of energy usage, right? Because you're going to start to see more efficiencies on the capital side again. And so that cost again is going to grow more towards the marginal cost of energy, which leads back to my first point where I started, is the lowest cost of energy is really the long-term sustainable advantage.
So on all these interviews, I always like to ask 2 wildcard questions. Okay. So the first question that I ask is, 5 years out, looking backwards, what will be like that obvious thing that people should have invested in, knowing that we're talking about a blockchain play, by the way?
Right. Now, yeah, so this will be, biased towards my, the longest part of my career on the sales and trading side, and figuring out how to make commodities feel more like a stock or a bond, and all the things that go around that. To me, and I'm already seeing it, is the financial service firms that are moving basically sales and trading models and capital markets models into the digital world. And so as we trade, with NFTs or all the cryptocurrency coins, or just simply storing contract data on another, like an Ethereum or something, right? So all of a sudden we've got all these new assets that are code that are going to be the new medium for everything from your healthcare records to your money to maybe your stock or your corporate governance, right? I mean, everything in the future has the ability to essentially be coded and taken out of, the traditional channels that we think. So the services firms that are going to facilitate the custodian of that information, the exchange of that information, and taking out frictions and restrictions of exchanging value for value I think is really compelling. And again, that's probably my bias, my background, but I have a hard time focusing on this part of it because I want to go talk about hash rate derivatives and all other cool things to tie the electricity, the physical side with the financial side, right? We're just scratching the surface, and Bitcoin's the main one now, but all these other assets or information is going to need to be a way to be exchanged, and those who are in the middle of that are going to reap the rewards.
Okay, so how about which industry? This is the second wildcard question. Which
Okay.
industry is going to be most affected, positively or negatively, by the way, by the blockchain?
Most affected, positively or negatively? Well, this also is more proximity bias because I was dealing with it yesterday. So I had a doctor's appointment, my annual checkup, and I wanted to get information from my cardiologist to my doctor. And I thought, oh, I've got a new app, and now I can go in here and it says share your records, right? I tried to share my records to a doctor that are 2 miles apart. Well, guess what? They don't exist on that network, right? None of the healthcare industry has the same protocol, same way to sort data. Now, whether it's personal information or health information, this is going to be a big change. And if we had, one company own it or one government own it, it's going to be outdated always, right? And so to me, the healthcare personal information industry, if it can be decentralized where you own your information and the platform and network is incentivized to make sure that always stays that way, then to me, that's the biggest change. And now I'll be able to send my information to whoever I want through a decentralized blockchain network.
That's secure
That
and
is
private.
secure.
And private. Yeah, no, I'm with you on that. I think it's so logical, because and I talk about this often. Unfortunately, if somebody goes into a hospital, right, they've got many different bills that they have to pay, right? And why does it process take so long to organize everything? Well, because it's not connected well, right? You've got so many different things happening all at once that are not streamlined. But if they were all on the blockchain and safe and protected, the insurance company could talk to the hospital instantaneously, right? They would be. I think healthcare is going to be breakthrough by the blockchain. Trent, we've covered a lot. If people want to reach you, they should reach out to Priority. I think Priority Power. I know that your handsome face is up there on the website.
Yep, you can find on the web, LinkedIn, and we get inbound inquiries all the time. So keep bugging us. We're excited to and humbled to be in kind of a central position in Texas right now, and making sure it's all done responsibly and in a way that benefits the grid as well as pro business for Texas. So we're humbled to be a part of it, and it's exciting on a daily basis. So
good. Thanks for being a part of our interview series. Keep on blocking, tackling, and making things happen.
Thanks, Dan. Appreciate the time.
Bye-bye.
Cheers.